study this setup here, okay? This exact setup on my chart. I need all of you guys to take note of this because this is probably one of the most mechanical entry strategies that has proven to work, okay? Now, what I'm showing you guys here is using the sweep plus IFVG. Now, if you don't know what an IFVG is, it is an inverse fair value gap. This is the setup that I look for, okay, for an entry trigger. Not all the time, but whenever I see this at a high time frame level, at a key point of interest, I know to enter that trade 10 times out of 10, okay? Now, what most people get wrong about inverse fair value gaps is they aren't waiting for a few things, okay? Number one, they're not actually waiting for a sweep of liquidity, okay? A sweep of liquidity comes first, okay? You need to see a sweep. Step number two, they're not waiting for that inverse fair value gap to actually confirm, meaning a candle closure, right? A candle closure above that bearish fair value gap if you're going long. And number three, they aren't waiting for bullish divergences to appear on their oscillator. Okay, in my opinion, the times where I've seen IFVGs fail is when I'm not seeing bullish divergences if I'm going for a long. It's when I'm not seeing that bullish momentum. Anytime I see a sweep into an IFVG with bullish momentum, that is a high probability trade. I know for a fact at that point that this inverse fair value gap is most likely going to play out to the upside, and I'll have anywhere from a 60 to 70% win rate when getting into that trade. This simplifies it a ton. Let's go over some recent examples. I'll show you guys some examples on Bitcoin and also a few other altcoins where I have seen this play out and how you can get in these trades yourself. I'm not going to overcomplicate this and make this video a 20-minute video because the truth is the strategy is very simple and it doesn't take that much, okay? So if I'm on a 4-hour time frame here, I'm looking at Bitcoin, I'm looking at a swing failure pattern of this low. Okay, that just means a sweep of this low. Actually, you know what? Let's do that. Let's go back in replay mode and we're going to trade this live together, okay? So again, we have our 4-hour low marked out. We're at a high time frame demand zone for Bitcoin. We are going to pull up our oscillator V6.2. We go a little bit further back here, okay? And what I can see now, actually, we're going to go one candle further. I can already see bullish divergences starting to confirm here on the 4-hour time frame, meaning momentum is increasing to the upside as price is remaining flat or eventually about to sweep this low and make a lower low. Now, if you guys don't have the indicators on my screen here, click the first link in the description below to get access to this momentum oscillator. You need this momentum oscillator in order to trade the strategy correctly. As price is approaching this low, I'm going to drop down to a lower time frame. I'm going to drop down to a 5-minute time frame. And what I'm looking for here on a 5-minute is a sweep of that higher time frame liquidity. Okay, you're not looking for a sweep of a 5-minute liquidity. Okay, I want to look for a sweep of that major low, which in this case is right here. Okay, boom. Price is sweeping this low. And as we can see, right, as price is sweeping this low, we're creating that bullish divergence, right? Momentum is increasing to the upside. You can clearly see momentum is increasing as price is making that lower low. Now, what we want to do is drop to a 5 to 15-minute time frame and look for that bearish fair value gap, which we see right here. A fair value gap is made up of 3 candles. Okay, so let's say you have one candle right here, you have a second candle right here, okay, big second candle, and then you have, right, a third candle right here. Okay, that gap in between the first and the third candle is going to be your fair value gap. This is where the internal liquidity lies. Now, for this entry strategy, we are not taking a trade off of this bearish fair value gap. Why? Well, because we understand we're sweeping high time frame liquidity, we're gapping down. We're going to wait for this bearish fair value gap to inverse, meaning we want to see a candle sweep below that high time frame low and close above. Okay, we can see here on this bullish candle, it actually closes above that bearish fair value gap on the 5-minute time frame, and we're seeing bullish divergences. Okay, the bullish divergence confirms that this inverse fair value gap is most likely going to play out to the upside. So we're just going to enter the trade as soon as that 5-minute candle closes above that bearish fair value gap. Also, it closes above that liquidity level, right? If we look left, right, we have this liquidity level right here, and we can see that not only are we inversing that bearish fair value gap, we're also doing a candle close above that previous low, making this a swing failure pattern. So we're going to enter the trade and target the external liquidity, which in this case is going to be this high right here. You can make the trade break even or risk free after this high is hit. So now the trade is break even, and we're going to let this trade play out. In this case, okay, we got stopped out at break even in this trade. Okay, we were up like 1 to 2, 1 to 3. We got stopped out break even. Again, forming bullish divergences here. Even if we go to like a 15-minute time frame, on a 15-minute time frame, we have this massive bearish fair value gap. Again, waiting for that candle to close above. We want to drop to the 5-minute, wait for price to inverse this bearish fair value gap. And again, we're going to be targeting this liquidity up here. Stop loss to break even after this high is reached. I'm just pretending like I'm actually taking these trades, guys, right? Like I actually don't know how this is going to play out. At this point, walk away. You know, you're already in the trade. We're going to let it play out. Now we're making it break even at this point. And there is our take profit, right? Using this inverse fair value gap method, waiting for that sweep, waiting for that inverse fair value gap, and waiting for that bullish divergence as your final confirmation. Okay, another example here on Bitcoin. Okay, I was looking for this 3 drive here, this bullish 3 drive to enter a long position. Again, I see we have this high time frame liquidity level here that I'm going to be looking to taking a trade off of. Again, I'm going to drop down to the 5-minute time frame, look for bullish divergences, and then we're going to look for an inverse of this fair value gap. Now, since there are a few fair value gaps here, right? We have one bearish fair value gap, another bearish fair value gap. This is when we can go to a 15-minute time frame and look for that 15-minute fair value gap, which I see right here. We're going to wait for that candle to close above with that bullish signal on the easy algo indicator. We also have that bullish divergence. Now we are in the trade. Okay, targeting this liquidity right here would probably be our take profit. Again, another 1 to 2.5 risk to reward ratio. Again, strategy is very simple. We're looking for a sweep, bullish divergence, and inverse of that bearish fair value gap. We want to see that candle close above a strong bullish candle, in this case with that easy algo buy signal. That is going to be our entry confirmation. Stop loss below that bearish fair value gap, targeting that external liquidity. Okay, let me show you guys another example of this strategy playing out on Hyperliquid. Okay, step 1, mark the high time frame liquidity level, which is over here to the left. Okay, cool. After that, I want to drop down to a 5-minute time frame as price is approaching that level, and we are going to look for a bullish divergence on the 5-minute with an inverse fair value gap. Now, in this case, I don't really see any bearish fair value gaps that stand out to me on the 5-minute. So we could go to a 15-minute time frame here, right? So we don't really have any bearish fair value gaps except for this one right here on a 15-minute. I would mark that out. Again, drop to a lower time frame, wait for a candle to close above that bearish fair value gap, at least targeting this liquidity right here to make the trade break even. This wasn't really a good example. You want to see a V-shaped reversal down and a very prominent bearish fair value gap get inversed. This is a much better example here. Again, we have a sweep of that low. This is the kind of trade you want to take, right? Just like this, where we have a very prominent bearish fair value gap right here on the 15-minute. We have our swing low here, which we are reclaiming with that bullish candle. Okay, so we're going to wait for that 15-minute candle to close. We're seeing that bullish divergence. We're going to enter right there, stop loss below that bearish fair value gap. Make break even at this level, okay? Make the trade risk-free and let the trade ride to the external liquidity, which is probably going to be all the way up here, okay? That is going to be our full take profit. You can take some partials around here if you'd like. Again, for a 1 to 5 risk to reward ratio, simply using the sweep, inverse fair value gap, waiting for that bullish divergence to confirm with that bullish candle, enter the trade. And that is it. That's literally the strategy, guys. This is a really good entry confirmation. Now, keep in mind, you want to use this with my trading strategy. So use this at key levels. Keep in mind, they must be higher time frame liquidity levels. If you want to incorporate key horizontal zones like key support and resistance level, the golden pocket fib, you can still do that. I just look for this as an entry confirmation. So I don't use inverse fair value gaps on a higher time frame. I use these on a 5 to 15-minute time frame and look for us to reclaim a key low with that V-shaped reversal. This is what you want to see. You know, right here, this is not really what you want to see when entering with this strategy. You want to see a very prominent bearish fair value gap sweeping that low and then an instant reclaim. You know, within a few candles, reclaim, and it will make this V shape. That's why they call it a V-shaped reversal. It's straight down, straight up. You can see momentum is clearly increasing to the upside, even if we drop down to like a 5-minute time frame, right? We have a buy dot on the oscillator. We have that buy signal. We're waiting for us to reclaim this low. We're combining swing failure patterns. We're combining bullish divergences. We're combining inverse fair value gaps all into one. That's going to be it for this video. Didn't want to make this too long. Wanted to keep it as simple as possible. You know, this is what I look for when I'm entering a trade. Now, keep in mind, I'm not going to enter off of this every single time, but when I do see this at a key level, I'm just more confident that the trade is going to go my way. So if you guys want access to the indicators that I have on my screen here to help me with this strategy, including these real-time bullish and bearish divergences, as well as these confirmation signals on the Easy Algo indicator, then make sure to click the first link in the description below. As well as getting access to these indicators, you're also going to get access to my daily analysis and signals every single day. Leave a like on this video if you enjoyed, comment something down in the comment section below, subscribe to the channel for more trading content, and I'll see you guys next video.